Somebody has asked, what is the likely impact of Tilney Best Invest in the situation? I'm taking from that we mean the recently announced merger of Towry and Tilney Best Invest, which should complete at some stage in the next month or so. In many, many ways, it's a really, really good time for this to happen. Because what we're looking for is strength in the market. We will become a stronger business. We'll become a business with even deeper expertise and capabilities for our clients. And also because of our scale, we'll be in a position to negotiate even better terms on behalf of our clients. So given the volatility in the markets, the strength of our combined business, making us one of the players in the marketplace in the UK, I think is very, very opportunist, come at the right time. All right, okay. Somebody else asks, the outcome is not yet defined, and so how many scenarios are we actually planning for? An interesting question. Andrew, would you like to comment on that one?
Well, thousands is the answer. We're always running thousands of different models of possible variants of possible futures and averaging them out. Yeah, I don't know what's going to happen any better than anybody else, and none of us do, and no one does, although that... That's one of the problems, I think, with the campaign was the level of certainty that people were expressing over various matters, and probably still are today. But we actually, our sort of strapline for our portfolios is investing under uncertainty, and that's clearly what's going on at the moment. And our philosophy and process is entirely designed around not being able to forecast the future and investing under uncertainty. So the portfolios will navigate their way through these circumstances, whatever the outcome is, and we'll look to take advantage, whatever the outcome may be. So we don't have to be able to forecast the future, fortunately. It's actually, our whole process is predicated on the fact that we don't and we can't, and we know no one else can either.
Okay.
You know, we've proactively decided not to do anything yet, because we don't know how things are going to play out, and clearly it's a minute by minute, hour by hour, day by day process at the moment. We're going to be looking for opportunities, but sterling's still falling, the market's still a bit weak, so we're not jumping in there on anything. Equally, there's no need to do anything too dramatic. We're so broadly diversified that we don't have to react and jump out of any investment. Anybody who's too concentrated or too sterling biased or so on and so forth will have a decision to make and will need to react. We don't. We're very broadly diversified. We don't need to take a knee-jerk approach to anything. We don't need to react. We can actually afford to sit still and wait for the market to come to us, opportunities come to us, and we'll look to prosecute such opportunities as and when they do. So we did bits and pieces in the run-up to the event. We made sure we weren't drifting too far away from target weights. We were running a little bit of cash. We've done various bits and pieces, but nothing overly exciting. We haven't taken any action since the result yet, but we're looking at it the whole time. In the moment there's something we think that makes sense, either to reduce risk or increase risk-adjusted returns, then absolutely we'll do it.
And of course, any kind of knee-jerk reaction that you make could just as easily be wrong as right.
Yeah, most people reacting at the moment will be taking an emotional decision. What you don't want to do is take an emotional decision, because it will probably be wrong. You want to be thinking, okay, I've got a long-term financial plan here, a long-term plan. Our process is long-term, our philosophy long-term as well. So no, we don't want to be taking an emotional decision at all.
In terms of our investment portfolios, are they likely now to focus more on worldwide assets and less on European assets, or again, is it too soon to tell?
We don't have a huge amount in Europe anyway, and we're very well aware of the link between Europe and the UK, and Europe's had, or still has, its ongoing issues with Greece and Brexit, as was, that never happened in 2011, and so on and so forth. So we've not had a huge exposure to Europe. So that's not necessarily a big problem for us, and we don't have that much in the UK either compared to most of our peers. We're much more, as you've suggested, much more internationally diversified. Going forward, it just depends on opportunity and valuation, relative and absolute valuation. So we're in a nice position where we can start coming back to the UK and picking up cheap UK assets and cheap sterling effectively as well. We just don't want to do it too soon. Never try and catch a falling knife is the phrase.
What would be the view on inflation? Would there be a view as to where we think inflation might go, Tony?
We'd expect some activity on interest rates. so interest rates to come down, and for more monetary stimulus to support markets at this uncertain time. Now, the move on sterling ultimately could lead to inflation picking up. Not so much in inflationary expectations, just that things are more expensive for us now. And that will impact probably the longer end of the gilt curve.
Right.
So yes, we would expect inflation numbers to pick up because of this move.
And index-linked bonds have performed very, very well in recent days on the back of these expectations.
Somebody asks, should attitudes to risk change? What is the 5 to 10 year outlook for the cautious investor? I guess that's, Dawn, that's really a question between a client and their advisor as to what their view of risk, and has that changed as a result of circumstances and so on?
Yes, I mean, risk is always in context of what you want to achieve from your financial plan. So there may be some goals that are more short-term, ones that are more medium-term, or ones that are more long-term. And so the discussion with the financial planner is about for what assets and for what length of period should I be taking higher, lower, or medium levels of risk.
One client has written in saying, should we lower the level of risk within our portfolios to a more conservative level over the next few years given what's happened? But of course we already have different varying levels of risk across the different strategies that we run, and therefore that would be a good argument for saying sit down with your financial advisor and make sure that the particular portfolio that you're in right now is actually suitable for how you feel about risk. Would that be
I think that's a fair comment, and appropriately said, Andy. Yeah, absolutely.
Excellent.